Good day, fellow investors. Over the last videos, there have been many comments about, Sven, what's your opinion about the current market? And I haven't done such a video for a while, so here is just my feeling, my opinion, my prediction of what I think will happen in the future. Of course, it's just an opinion, but I think you will enjoy it. If I look at the market, yes, we have had this 10-11%, let's say some call it dead Katie bounce, some call it a rebound forever, but the market has been searching for direction in what seems to be a slow and steady negative trend. Of course, better inflation data, lower rates, everyone happy, no recession, maybe a soft landing. So the market is pricing that currently in. But if you look at it over this longer 1 year perspective, nothing bad has happened yet, nothing terrible, but it is searching for direction. And perhaps the most important thing, 14% down when it comes to the market and investing, especially with what has happened over the last decade, is really nothing. And this is because it's still an environment with extremely high liquidity. It's not pouring money, but there is still plenty of money. Those 30 trillion injected into the system are still there. And if you look at the unemployment rate, you cannot have a crisis at full employment. This is impossible. Until unemployment is this is natural unemployment. Until it is so low, that's no crisis. This is a crisis, okay, this was pandemic, etc., but it quickly went down to full unemployment. And therefore, if you look at Michael Burry, so okay, we were in the greatest speculative bubble of all times in all things, and many things like the really marginal, the extreme speculators, the gamblers, those are down 74%. But then if you look at the market, even from the peak, it's down 14, 16, 17%. And if you just compare it where it is now with where it was a year, 2 years, 3 years ago, it is still 54% up over the past 5 years. So nothing crazy there. And even if Michael Burry was right that it was the greatest bubble of all, especially in many things, crypto and all those crazy things that Cathie Wood did. And it's still not happened. So as we discussed a few months ago, the 50% to go more still isn't happening. And that's because something that I want to discuss also is the currency, the value of the currency compared to the stock market. If we go back to 2007, a scenario where central banks don't immediately inject money into the system at any hiccup, then yes, then 50% down, unemployment and everything is the scenario. But we are now in a different scenario where if unemployment goes a little bit up to 5%, immediately the Fed pushes in money, it makes it pour money, ECB, everyone projects this or that, because the Fed has now taken the job of keeping full employment. So that is also different, but if the Fed does that, then over time, by injecting and printing more money, no matter where you are from, then it's clear that the Fed is sacrificing the currencies for their plan. And that will work until it doesn't, and then Michael Burry will be right. But if we know that they are sacrificing currencies, then it is clear that investing in businesses, great businesses, is the best way to go, no matter the danger. And even now, the markets really are exuberant because there was one data point where inflation seems to be cooling off. But with the money they printed, that's very unlikely. However, given the fact that there is so much liquidity there, the market has boomed in the last 3 weeks, a month, 11%. That's really crazy. And that explains the short term, where expectations lead the short term, fueled by still a lot of liquidity in the market with people, with investors, we are still living in a very, very rich world. We haven't seen any harshness, any difficulties, real difficulties. And even if gas prices go up, your government is paying for that difference. So it's still good. But in the long term, it will be about fundamentals. And even if now suddenly it looks like the 24 trillion treasury issue is not an issue anymore, but if I look at this, and the last time I looked at this, this was 22 trillion and it was already a big issue. Now it's 31 trillion, and this doesn't even include all the Medicare issues that will come in the future. That is really crazy. These are the long-term fundamentals. So it is pretty clear to me that they are going to sacrifice slowly and steadily the currencies. There is no other way out, but this also means that maybe investments might not be that bad. If we look at the current home index, the level now for the US is 617. I think it's the same in Europe, etc. But if you look at it just 10 years ago, it was 310. So we have had a 2x in real estate values in money values. Real estate is real estate, and that's why I think that they are going to keep on sacrificing currencies. Plus, these numbers are averages, which means that in the middle of nowhere, those homes are included here, and therefore, there where there is demand, home prices went up 4 or 5 times. And that shows not that the values of those homes went up. A home is a home, but that the currency, the value of the currency went down. And I think that's a long-term trend that we are going to continue seeing. So when it comes to prediction, of course, this is all a lot of sentiment, a lot of fueling on the liquidity that is still there. This is 11% in a month. Okay, great, but I have a sensation that things are still good. People still have a lot of money, so unemployment is full, as we have seen. So we have seen nothing of what is a recession, a depression, or really something that changes the structure and the ways of how we live. I hope that this printing money goes further forever. We all have a great life. The Fed prints money, everybody happy. So if they can push it till ever, great. Unfortunately, I also know that all governments in history have tried this and that sooner or later it fails, but we get the development, we get the infrastructure, the roads, the everything, so that should likely be good. So they're just going to print money, continue to do that, and just I analyzed yesterday Bill Ackman's portfolio. All his businesses are, let's say, inflation, long-term inflation, protective businesses. So you might get some ideas there. Also hedges. Check also my other videos, subscribe to the channel, and I'll see you in the next video.